Hey there, friends. Welcome to the weekly market update. I appreciate you watching. My name is Phil Goff. I'm with the Home Finance with Phil YouTube channel. This is just, like I said, a weekly market update. We take a look at what the rates are doing from a loan perspective and just talk about the market in general. So let's go ahead and just share the screen here right quick so we can take a look at just how things are doing. So no surprise to anyone. Hopefully you're not surprised. The rates are just not great. And by not great, I mean just continuing to go up. Today, Mortgage News Daily is showing that the 30-year conventional fixed rate is averaging 8%. FHA and VA are also pretty high. Normally they're lower by comparison to what the conventional rates are doing, but just right now with the Federal Reserve fighting inflation and doing the things that they're doing and raising rates and just the volatility, the rates are just they're not separating out and coming down like maybe we anticipated. So when we look at the chart, you can see every week we say red is bad, green is good. Well, there's just not a lot of green there, right? So every day it's some other news that they take into account that makes people feel uneasy about the industry. When it comes to rates and when we talk about rates, 8% isn't a horrible rate. And I know that feels weird for us all to say. I think some of it is a narrative we're throwing out there. 6%, 7%, that even felt high, but that's really a pretty normal place to be. Down at 3.5% is not healthy for our economy, really. When my parents bought their first house, which was, I don't know, 30 years ago, maybe. I mean, I think they were paying 14%, 13% interest rate. I mean, I was not paying that much attention. I was probably 4 or 5 years old, but I've heard stories about it. So, in the grand scheme of things, 8% is a okay rate, not great, right? Hopefully we'll see that changing. One thing to look at, we're about to get the jobs report today, which will have its effect one way or the other on the market. But when we look at the jobs report, we see the jobless claims right now are really far down, which is something that they don't want to see. They want to see that it's more aligned with bringing inflation down, which means people generally are losing their jobs. Well, they have this thing called the WARN report, and it's companies that are large companies that have a lot of payroll, that have a lot of people working for them. If they're going to shut down something, a place, if they're going to lay a bunch of people off, they have to give a certain amount of days of warning. So this is what this shows. So if you look, the jobless claims are down, the orange line, but the warnings are up by quite a bit between September and October, which leads us to believe that maybe there's going to be some layoffs, which is horrible for families, but it will hopefully help adjust inflation and what they're looking at to be at a more of a normal level. And so, like I said, there's no, hey, this is great for one person, this is great, this is bad for another. I mean, that's basically what it is. There's no happy ending for everyone, I guess is where I'm going with that. Oh, so a lot of interest from realtors lately with, hey, mortgage rates are so high. What do I tell buyers? How do we get people interested? So, look at the yellow line here. There's no guarantee that rates will come down anytime quickly. They might even go higher. And there's no guarantee that home prices will drop. In fact, I would say the guarantee that home prices will drop is a fallacy completely. Home prices generally go up, right? Especially in an area where people are moving to. So while your interest rate is high, well, rest assured, I mean, when we see that since 2020, not that long ago, we have 26% home price, appreciation. That means that, if you want to wait on the sidelines for this thing to happen, if you want to wait for 5% again, your home price is going to keep going up and keep going up. So you might have a better interest rate, but that home price is not going to be lower. You're going to have to pay more to get that house. Another thing about this is, if what happened with the jobless claims actually goes through and we start seeing, a hint of a recession, generally when a recession hits, part of the way to fix things is to lower the interest rate. So when we lower the interest rate, more people will be entering the market. So if you have buyers right now that have the ability to buy a house, when more people enter the market, the first thing is they're going to be fighting for houses with other borrowers that aren't out there right now. The second is when there's fighting occurring, that means the sales prices are going to go higher. So it's kind of it's a bad mojo for people if they're going to be sitting around waiting on that. If interest rates do drop a lot, they can always refinance. And everyone I know of, every lender I know of, is offering refinance packages now for a certain amount of years where they'll do it for a very, very cheap. So I would this is the major incentive I would say to tell people, if you can buy a house right now, get in before house prices start going up and before more people come back into the market. Also, I've heard recently, what are we doing as far as just an industry? What does it look like for ideas of changing things? And there's a plane flying by, and I apologize about that if you can hear it. Um, but here's some things that Biden's recently come out with. Nothing's passed into law yet, but they do have a neighborhood homes tax credit, and it is built to help rehabilitate the new home market and also offer down payment assistance. And so you can read more about it on this slide. And if you want these slides, just shoot me a text or an email, and I'll happily give them to you. They also HUD is looking at making some policies to the changes to how things are viewed, how much of a difference it makes to have a positive rental history, how much of a difference it makes in the overall file to have on-time student loan payments and be in good standing. They're trying to help people just have a better view. So they're taking a bit like a harder look at that. They're also looking at what they can do to help make the rehabilitation mortgage, or like the 203K rehab mortgages. They're trying to alter that a little bit too. That's about it. I know it went a little longer than normal. I know the times that we're in, though, require just more of a deep dive of what's going on. So if you want to talk about any of these topics, as we head into the weekend, if you have anyone that you just need help, how to approach a buyer, if you need me to help talk to the buyer, if you just need whatever your needs are, I'm here for you. My team's here for you. We do work on the weekend just like you, all my realtors out there. So please feel free to give us a call. If I don't hear from you, hopefully good things. Hopefully you have buyers or you have sellers and you're just killing it. So I look forward to talking to all of you sometime soon. Have a great afternoon.